Hello everybody, as you can see I am wearing the bright red hoodie because things are bloody in the streets. Literally everything is down, baby. Yo straight in a Range Rover. Except we don't have a Range Rover because we are broke. The economy is not going to get fixed anytime soon. We have the worst inflation reading in over 40 years. 8.6%. 8.6%. The problem with inflation is this. Inflation rose, and then it went down, and then it hit 8.5, and then we thought that's it. Inflation is out of here. It's out of control. But then inflation went back down, right? Inflation went back down to 8.3. And then we had this hope, this, please, Lord, please save us from what's about to happen. And if you give me a moment, I'm going to correlate all of this. Don't worry. Just listen. Seriously, just listen. But we get our report today, a month later, and the inflation is actually 8.6%, 8.6%, which means that the inflation is not going down and the inflation is going up. What does that mean in plain English? We have no inflection point. We did not have maximum inflation. We did not reach the peak of inflation. That's what it means in plain English. Let's go on and explain what that exactly means with the Federal Open Market Committee. They're going to be meeting next week for Wednesday and Thursday. I will be filming it live. When they come out, the FOMC, they meet 8 times a year. In their meetings, they talk about how much they're going to raise inflation, and then they give you a forward-moving statement about the economy, what's good, what's bad, and what they're going to be trying to do to try to solve things. The Federal Open Market Committee, the Federal Reserve, they have 2 core aspects about them. Like they have 2 underlying principles. They try to stabilize the economy, that's one. And number 2, they try to stabilize unemployment. They want maximum employment and maximum stabilization with the economy. An accepted number of inflation should be 2%. At 8.6%, we are having nearly 5 times more inflation than we should have. The reason I'm saying nearly 5 times, we probably have a lot more because as this stated 8.6, we really have inflation of 11 or 12%. If we reached an inflection point, which we did not, and that's the problem. That's why this report means so much. If we reached an inflection point, and again, I want to stress, we did not, then we know the Federal Reserve was going to raise 50 basis points in June, 50 basis points in July, and we knew that August they're closed. September they probably would have raised 50 basis points. But after that in October, it probably would have been 25 basis points to slow down the rate increases. If they slow down the rate increases, this probably would have helped the market to start recovering. Now, since inflation did not peak, it did not reach an inflection point. Since inflation is still going up, it's going up really freaking strong. The Federal Reserve is probably going to be more aggressive with their policies. What does that mean? They will be raising, instead of 50 basis points, I could see them in the next 3 meetings raising it 75 basis points instead of 50 basis points. Someone's going to say, Adam, how? Why? Why? To curb inflation? Because it's literally out of control. This is out of control. I did a live literally last week for the jobs report, and jobs report came in exactly how much they came in the month before, which means we have a strong labor market. Why? We have 1.9 job openings for every 1 person that's looking for a job, which means our jobs market is considered super strong. If our market is super strong, the Federal Reserve does not want to cause a recession. What does that mean? A recession, which we're already in a recession, they just can't admit it because we don't have the numbers for this quarter. A recession is when you have 2 negative quarters of GDP, gross domestic product. So basically GDP stands for growth in the economy. That's the way I see it. If you have a strong labor market and you raise the interest rates to curb inflation, that means that people working, we're not going to go into a recession because there's jobs, there's money going into the economy. It's not going to slow down. If we have high unemployment and the Fed raises the interest rates, then they're scared for something called stagnation, where they're raising interest rates, inflation is not going down, and the GDP is not growing. That is the worst thing that we can possibly have. The European national banking system, basically like our Federal Reserve, but for the European Union, is also now going to raise their interest rates. This is the first interest rate hike in 10 years, and they were waiting for this specific moment. Is it a coincidence? I don't know. They're probably privy to some information that we don't see on the open market. That's how all politicians work. It's all good. What's going to happen now? And I made a video yesterday. Me personally, I was so tempted to buy more stocks. I was so tempted to buy more crypto, like big buys, but I didn't. I held strong. And I still have 50,000 on the sidelines, as I said, for stocks. And I have 50,000 on the sidelines that I want to buy 2 Bitcoin when it hits 25,000. It's really hard to stick to your guts. It's really hard to stick to your plan when it comes to finance, because the last 10 days or so, crypto markets started going up, stock markets started going up, and then in your mind, you're like, wow, this is actually really good, and I don't want to miss out. I don't want to lose out on the FOMO, fear of missing out. There's going to be FOMO, and everyone's going to start buying. This is psychologically how we think, and we need to train ourselves to think a little bit different and think about the bigger picture. Now, I'm not some guru or anything, not financial advice, purely entertainment, of course, and you guys can do whatever you want. Maybe the market goes up tomorrow. Me? I don't think the market is going to go up tomorrow. I think the Federal Reserve announces a 75 basis points rate hike, and I think that's going to collapse the entire stock market. It's going to collapse the entire crypto market. That's going to come back a little bit later. That's what I think is going to happen. I always said that this bear market is going to last another 3 to 6 months and that we were possibly out of the down curve. But now I think that the market is going to go down a little bit more than what I thought in the beginning, because I thought we reached an inflection point, but we didn't reach an inflection point, and our peak keeps growing. That's very, very bad, because the Federal Reserve now does not have any gauge and they don't know what to do in order to bring down this crazy, crazy inflation. If the next report comes out and say 9%, I don't see the stock market recovering. Forget about 3 to 6. Now it's 6 to 9 or 6 to 12 months recovery. Just be patient. If you have cash on the side, that's a very, very good thing. And try to follow your rules. Try to follow what you want to do. And if you want to buy this whole time, that's okay. You can dollar cost average. Like, let's say you have $1,000 and you want to spend that $1,000 in this market. Well, maybe you would want to spend $50 for the next 20 days, or maybe you want to spend $10 for the next 100 days. And you guys can multiply that number by whatever you want. For crypto, I have a buy-in, right? I'm buying $200 of Algorand every single day with an extra $200 buy every week. I told you that I will be doing this for the next 1 to 3 months. I'm like my second or third week into that. I'm still going to stick to that because I don't know when the lowest part of the market is going to be. And I want to buy on the way down, I want to buy on the way up. But I'm not making any huge purchases unless I see Algorand or some crypto that I like, not just Algorand, is going to completely tank. For stocks, I have the public account, put in $10,000 into it. I did put in another $5,000 the other day, and M1 kind of screwed me twice. The whole plan was to buy $100 a day, like I'm saying, and they just put in the money right away. It is what it is. But my personal accounts and everything else, like I said, I took out $50,000 and I'm just waiting on the sidelines. That's my plan right now. I have a feeling that there's going to be a lot of pain. I have a feeling that there's going to be a lot of a down market. And I believe that you're always going to find an opportunity to find a good investment. All you need to do as an investor is to hold tight and understand what's happening in the market. And you got to understand that you can pivot, right? So I thought maybe we reached an inflection point and now the inflation is going down, and which is going to make the Fed a little bit more dovish. Hawkish means aggressive. Dovish means not as aggressive. Well, that obviously is not going to happen. And my hypothesis, my thesis is proven wrong. So you need to shift and pivot and try to do something else. Guys, in the comments below, I would really appreciate you guys telling me what you think. Maybe I'm wrong. Maybe I missed something. I don't know everything. We're just chit-chatting over here, and I would love to hear what you guys have to say. But with inflation being at a 40-year high and with the midterms coming soon, I honestly think that the Federal Open Market Committee is definitely going to be going 75 basis points as opposed to 50. When that happens, it's going to be like the nail in the coffin. And that's when I think the stock market is going to be down, down, down. Now, I could be completely wrong, but I believe that that's what's going to happen, and that's how I'm going to play this market. As I said, I do have around 100,000 on the sidelines between my crypto fund and my stock fund, which I'm going to be investing when I think that the market is getting a little bit more bottomed out. Thank you.